Have you ever thought about investing as a quest? I mean, not just for a decent return, but for something truly legendary. Today, we're going to talk about the hunt for the 100 bagger, a stock that could literally change your financial life. So what does a quest like that even look like?
Well, it often starts with a number that, let's be honest, most of us just dream about. Not just a goal, but a real life-altering destination: $1 million.
Now, here's the wild part. We're not talking about a lifetime of scrimping and saving to get here. We're talking about the kind of return you could get from a single, well-chosen $10,000 investment.
Yeah, I know. It sounds like pure fantasy, right? It's like trying to find a unicorn out in the wild. But what if I told you there's a map, a study that actually charts the course these incredible investments have taken in the past?
Okay, so before we get too far down the rabbit hole, let's just make sure we're all on the same page. A 100 bagger. It's just a stock that gives you back $100 for every single dollar you put in. It is the grand slam home run of the investing world.
So our map, our guide for this whole adventure, comes from Christopher Mayer's amazing deep dive called 100 Baggers. But what's really cool is that his work actually stands on the shoulders of a forgotten master, an investor who kind of cracked this code decades ago.
And that brings us to the first leg of our journey. We've got to jump in the time machine and go back to uncover a secret from this brilliant but often overlooked investing mind. So, meet our original guide, a guy named Thomas Phelps. He wasn't just some analyst. He was a bureau chief for the Wall Street Journal, an editor at Barron's, and an investor who, way back in 1972, became obsessed with studying these monster stocks. He wanted to know, what's their DNA? And after all that digging, all that research, Phelps boiled his entire philosophy down to just 5 simple words: buy right and hold on. Now, it sounds almost insultingly simple, right? But Phelps himself learned, the hard way, that the hold on part is the toughest battle an investor will ever fight.
And this is where the lesson gets really personal. To show just how agonizingly expensive it is to not hold on, Phelps told his own painful story. He sold his stock in a super promising company, Polaroid, to cover a doctor's bill. I mean, it's a decision any of us might make, but that one choice cost him a fortune down the road.
Get this, he kept the little confirmation slip from that sale for the rest of his life, just to remind himself of what he'd done. His own words on it: that's an expensive doctor's visit. Talk about a lesson paid for in cold, hard cash.
You know, that mistake from Phelps just hammers home the unbelievable power of time. I mean, look at the math here. You don't need to hit a 1 in a million lottery ticket stock. You just need a great business that can steadily grow for decades. Even a 20% annual return, which is really strong but not impossible, gets you to 100 bagger status in 25 years. It just goes to show you on this quest, patience isn't just a virtue. It's literally the secret sauce.
So this brings us to the biggest, baddest obstacle on our journey. And it's not a market crash, it's not a recession. According to Phelps, the greatest villain in this entire story, well, it's you. Think about it. We are just wired for action. We're constantly checking our phones, we're watching the stock ticker, we get all antsy when a stock goes down, and then we get tempted to sell and lock in profits when it goes up. This constant nagging need to do something is the single biggest threat to ever finding a 100 bagger. Phelps had this great kind of folksy way of saying it. It's something he learned from a carpenter when he was a kid. All that constant trading and tinkering, it feels productive, right? But a lot of the time, you're just making a mess. It's just a lot of activity without any real results. So if we are our own worst enemy, how in the world do we protect ourselves from ourselves? Well, Phelps's ideas inspired this simple but totally brilliant strategy that basically acts as a shield against our worst instincts. It's called the coffee can portfolio, and the idea is straight out of the Old West, back when people would stick their valuables in an old coffee can and literally hide it under the mattress. The whole point is to remove the temptation to mess with it. So how does this actually work? It is incredibly simple. Step 1, you do the really hard work up front to find your absolute best long-term investment ideas. Step 2, you buy them, and then you mentally lock them away in that coffee can. And then step 3, and this is the hardest part, the really hard part, you commit to leaving them totally, completely alone for at least a decade.
Okay, so we know we have to hold on. But what exactly are we holding on to? What is it that actually powers a stock to a 100-fold return? Well, this is where we get into the mechanics, or what Christopher Mayer calls the twin engines of growth.
It's this powerful 2-part formula. Engine number 1 is pretty straightforward.
The company's profits have to grow a lot for many years. But engine number 2, that's the rocket fuel. That's when the market gets so pumped up about that growth that it's willing to pay a higher and higher price for every single dollar of profit. When you get a great business and you combine it with growing excitement from investors, man, the results can be absolutely explosive.
I know this all sounds a little abstract, so let's make it real. Let's look at an honest-to-goodness example. Monster Beverage is a classic case study of a stock that hit 100-bagger status at lightning speed. I'm talking just 10 years, by firing up both of those engines perfectly.
Right here, you can see that first engine just revving up. Between 2002 and 2006, Monster's sales didn't just grow, they went vertical. But look, the real magic is in that gross profit percentage. That number tells you how much cash they made on every single can they sold. As their brand got stronger, they could charge more, which made them a fundamentally more profitable company. That is the sign of a seriously powerful business.
And the result of all that brand power? Just an absolute gusher of pure profit. Their net income grew over 30 times in just 4 years. And check out the return on equity, or ROE. Think of ROE as a grade for how good the company is at using its own money to make more money. It quadrupled. This was basically screaming to investors that the business itself was turning into an incredibly efficient profit machine. That's engine number 1 in total overdrive, which then, of course, lit the fuse on engine number 2, a sky-high valuation from the market.
So here's the big takeaway. We spend so much of our time and energy looking for the next hot stock to buy. But what the work of Thomas Phelps and Christopher Mayer really shows us is that the real secret, the truly difficult part, is having the guts and the patience to hold. And that forces us to ask a totally different and maybe a much more important question. What companies out there are actually good enough to put in your coffee can and leave alone for the next decade?